Hello and welcome to BQ Prime. You're watching Talking Point, and my guest today is Mihir Vora, who is the CIO of Trust Mutual Fund. Mihir, thank you very much for joining us on BQ Prime. Let me begin with the kind of earnings that we are seeing in this quarter. Uh, to start off with, how do you see the earnings panning out? Is it as per your expectation?
Good morning, Sanjeev. Thanks for having me here. As far as the earnings season is concerned, I think it's at the index level, I think it's broadly in line. I don't expect at the Nifty level major upgrades or downgrades to the EPS estimates for the indices. So I think the results have been okay. Of course, we can talk about the sectoral trends, etc. But I'm not too concerned about the overall trend so far.
Within the sectors part of it, we saw financials doing pretty well. Is there was that under as per your expectation, given the fact that NIMs have been pretty much steady for most of the banks which are there, especially the big boy like SBI, which came out on Friday, Saturday. Do you see this trend of stronger NIMs continuing for another quarter or so for banks, especially private sector?
Yes, but though I think that the liability repricing and asset repricing, there are certain mismatches. So if in a quarter we see some movement or some reduction in NIMs, it should not come as a surprise, and it wouldn't be too much of a negative, I would say, because there is always some gap between the time that the liabilities are repriced and the assets are repriced for banks as well as for NBFCs. But in general, I've seen that whether it's a rising interest rate scenario or a falling interest rate scenario, banks and financials typically over a cycle do tend to maintain their margins. So I'm not too worried about margins. I would be monitoring more of the stress on NPAs and the growth in credit. So I think growth and asset quality is what I would treat as more important, not so much the margins. I would say margins they manage somehow.
How do you see consumption as a sector moving? Because we saw, as predicted, there was some, weakness which is there in consumption. But going forward, do you see some kind of impact with respect to the measures which has been currently taken by the government, which especially, increasing Manrega so that the rural consumption increases or the wages increases in rural sector? Is that going to have some kind of impact on consumption sector as a whole?
The consumption overall has been below par. I would say the growth in consumption has been below par, and most of the growth in consumption that we are seeing is following a K shape. So the higher segments, urban segments, within urban, the higher end premium segments are doing well, and this is across categories. Whether we talk about automobiles or real estate or FMCG, it's the premium segments which are doing well, and there was a recent study or not study data point which came out which showed that even within the cars, for example, the super premium segment is growing faster than the normal premium, so to say, segment. So there is a K-shape across the board in terms of recovery, which means that the lower income categories have still not fully recovered from the post-COVID impact. So I think the rural economy as well as the urban poor are still still to fully recover from the COVID impact, and that's the reason I do believe that, especially this being an election year, we are expecting elections in the next 9 months or so. We will see support to the weaker segments continue, whether it's on the urban side or the rural side, because there is stress, and we are in for a election year. Now that should have a positive impact on the lower end consumption like FMCG, etc. As I was saying, because these have been the weak spots, so there should be some support there. Stocks have underperformed, so there might be some interesting plays out there.
Mm-hmm. Having said the context, Mihir, this will be the 8th year if we end on a positive, return, and you've been very bullish. Do you see there is this run to continue? Means what are the factors that will push returns also in 2024 if we end 2023 calendar year on a positive note?
See, 8 years in a row is going to be a record if we end at these levels, as you rightly said. So I would say that incrementally, obviously, since the markets have done so well, it will be relatively more difficult to make money. Having said that, there are enough number of segments and sub-segments where stock picking can be done. And if 2023 is any indication, there are the non-large cap segments where a lot of money was made in spite of the fact that the Sensex or Nifty were up only about 6%. We saw the mid-cap indices go up by more than 20% and small cap even more. So I think there is enough scope for stock picking. Many segments are emerging with government support and organically too, with private equity, etc. support. So I think there is enough scope for stock picking, but we should not expect the kind of returns for the next 2-3 years like we have seen in the last 2-3 years, I would say.
At Trust MF, what is the kind of themes that you're picking up to build up a portfolio?
So, as I said, the economy has done well, and most of the segments which have been fastest growing are either linked to global recovery, China plus one, or the ones which have been a focus of the government. So, if you look at segments like defense, we are talking about higher spending in defense as well as much more local manufacturing. Railway capex budgets have been up by almost 3 times, so railway spending a lot of happening. In power and transmission, power generation as well as power transmission and distribution, we are talking about renewables as a big thrust, hydrogen as a big thrust. But more importantly, when you talk about solar power or wind power, it needs a lot of storage and lot of change and additional investment in the transmission and distribution segments also. So renewables per se and the related expenditure in T&D also is a significant theme. So all these are segments where we have government support. Plus, the government is talking about more and more local manufacturing, import substitution, as well as India being a base for exports. So there we are talking about big PLI schemes across segments. We have seen success in the electronics manufacturing, especially mobile phones. Now it's being rolled down to ACs and other white goods. Plus chemicals, pharmaceuticals, semiconductors. Big fabs are hopefully going to come into the country. We already seen Apple shifting significant amount of production to India. So I think manufacturing as a theme supported by government, PLI is also one theme that we can look at, whether it's chemicals or the electronics that we talked about. So that's more on the investment side. Real estate, so far, I think the premium segments are doing well. But if interest rates come down and we see job creation continue, then I think like this year, next year also should see real estate do well. So I think broadly speaking, the investments theme is doing well. The consumption piece has been weak, as we discussed, and if we see support from the government and hopefully a revival post the busy season, then even that should be an additional kicker to the economy. But as of now, the things that are doing well are, frankly speaking, more on the investment side. Consumption is still a question mark.
Interesting. You've been bullish on infra as well, and I was looking at one of your tweets a few days back with respect to data centers. Do you see a huge investment coming into this segment of data centers, because Mumbai has more than half of them? Do you see data center and the need for data center infrastructure increasing, and is that theme is where next level of infra investments going to come in as well?
Certainly, of course, it won't be as big as IT services or anything, but incrementally, it will require significant investments. For example, Bombay alone, the infrastructure required for data center runs into millions of square feet. So that kind of real estate will be required. It's very power intensive, so power generation, power capacities will be required. So, and the fact is that the government is now insisting and has told all the multinationals to basically localize the data storage by legal means. And that means that India being one of the largest consumers of data in the world, there will be ample scope for data center investments also. So that's another leg of capex that we can continue to see.
And you see allied sectors like power supply, power utility majors and others playing a bigger role, because
and real estate.
Do you see commercial real estate now booming on the back of data centers? Because at one time we saw IT services like in Bangalore, the commercial real estate boomed because of that. We also saw in other cities where co-working spaces started coming up. So again, we had that impetus coming to commercial real estate. Do you see now data centers being the next drivers for commercial real estate demand?
It could be, but it will be only incremental. I don't think it will be like 20% or 30% of commercial real estate. Probably additional 5-10% extra demand can come because of data centers.
Give me a sense of how do you see the real estate sector, because you watch that very closely as well. We've been seeing the regulator being little edgy because of the kind of the demand which has come from housing sector of housing loans growing exponentially, and also I think there's a trend of unsecured loans also building up for the housing sector. How do you see this sector as a whole?
So, see, in housing, couple of trends are emerging. One is, as we mentioned, in real estate, basically, let's talk about real estate. One big thing is that we are seeing a distinct consolidation of the sector. Customers do not want to take the risk of unknown developers. So we are seeing a lot of consolidation happening into the known larger developers. And a lot of them happen to be in the listed space, but even in the unlisted space, there are very big developers, which are good brands, etc. So I think the the growth rate of the larger guys, whether it's unlisted or listed, the real estate players, is going to be far more than the rest of the industry. So that's one distinct trend that's happening across the cities, whether it's North India, South India, East or West. Everywhere we are seeing that branded developers are actually able to go and command a premium, and you see bookings, happening, overnight. Uh, on the residential side, I think the demand is still at the higher end. So we are talking about premium and those kind of levels. On the really low end affordable housing, it's kind of sluggish, as we can see from the disbursements, etc. So I think it's still a K shape. But the thing is that value wise, and if you look at the profit pie, it is still in the premium segment. So that's why you see the real estate developers doing well, because the high end segment is doing well, and there are good margins to be made out there. On the commercial real estate side, the supply demand balance has been very disciplined, and again there also it's basically the top 4-5 developers who are basically developers and owners, and the big REITs and the foreign entities, which are the largest landlords in the country now. So residential is doing well on the premium side, good for the listed companies. And even commercial, there is very good supply demand discipline. And so to that extent, we see, the demand for residential may not be, the demand for commercial may not grow by 20% or so, but even a flat demand does ensure good margins for everybody, because it's a very organized and very structured place now.
Mihir, in this entire space, we should also talk about the commodity sector, because that's where I think after a spike after COVID, because the supply chain and value chains are getting disrupted, prices went up and then it cooled off a bit. But again, now in the last 1 quarter or 1 or 2 quarters, we've seen a gradual increase in prices there. Do you see that to be a dampener for some of the consumption companies, where they were not able to there will be a margin pressure coming in for some of them?
See, commodities, except oil, because that's probably linked to the conflicts in Ukraine and the Middle East, especially Palestine, etc. Except oil, I don't see commodity prices increase sharply, whether it's food or metals, etc. And that's because China, which is the largest consumer in the world, is not doing that great. So unless we see China infrastructure and real estate pick up, I don't see a big upside in global commodity prices, except oil, as we discussed. So to that extent, I'm not too bullish on this segment, and I would probably buy some things only if they are crashed out or bombed out as value, rather than try to chase a global recovery.
Mm-hmm. Finally, Mihir, if you look at fund flows, do you still see the gradual increase in domestic flows to continue at this current level, because of the current market volatility, or if they've been marketing sideways for the last couple of months? We've seen a good flows coming into mutual funds. Do you see that somehow stemming or gradually slowing down as things gets normalized in the stock market, and again flowing back to the capital markets?
Yes, I think so. Typically, negative flows or outflows will happen only if customers see 12-month or 24-month rolling returns to turn negative. And we are a long way from that, especially in the last 12 months, as we say, though large cap indices have delivered single digit returns. The small and mid cap segment has given enough excitement to the investors. So I think the interest in the markets will continue, and sentiment can make a U-turn only if there is a sustained negative return period for investors, which we are quite far away as of now.
Do you expect this in the mutual funds? What we are seeing as SIPs coming into 16,000 crores every month, that kind of flows continuing for mutual funds?
Certainly, not only SIPs, but as you know, even brokerage accounts, demat accounts every month. We are talking about large numbers being added, so that will continue to bring flows to the market.
You briefly mentioned about mid cap and small caps. I just wanted your thoughts on that. Where are we on that, on valuation? Are valuation stretched out for some of them, or do you see enough potential? And is there enough liquidity for investors to get in and get out easily based on event risk?
See, event risk nobody can rule out, and so I mean difficult to predict, frankly. But the fact is that yes, there are pockets of froth in mid and small caps because of low liquidity. Especially some of the PSUs have very little floating stock, so it's even a little bit of buying can really get the stock prices up. But leaving that apart, the fact remains that we talked about a lot of sectors today, right? The sectors which are higher growth, which have government support, which have PLI schemes, which have lots of potential growth. If you want to get exposure to those sectors, they are not available in the large cap indices. So if we want exposure to some of the thrust areas, some of the faster growing areas of the economy, you have to go to the mid and small cap segment, and that's why I think that premium may continue for a while.
Mm-hmm. Mihir, it was a pleasure talking to you today. Thank you very much for joining us on Talking Point. Mihir Vora, CIO at Trust Mutual Fund, talking about the sectors that he likes and also what kind of returns that he could see going forward. Thank you for watching BQ Prime.